Jim, hello. How are you doing, mate?
I'm fine, Woody. How are you?
Yeah, good. Now, I'm really glad I got you on because normally we tend to discuss the ideas in one of your many and brilliant books. And today, though, I thought we could turn our attention to something else that you work on, which may not be as well known to the masses out there, but it's certainly why I believe we are in a privileged position working with you. Each month, you publish a pretty remarkable advisory letter called Strategic Intelligence, and
Mhm.
it's been running for a good amount of time now. It's got to be at least, what, six or so years now, I think?
That's about 6 years. That's exactly right.
Right. And so in your books, you tend to cover the big overarching, big thematic events playing out, currency wars, the death of money, and it's an ongoing narrative which has gone on since 2011 and it's still ongoing now. And you delve into the world of money, gold, geopolitics. But in your monthly newsletter, it kind of allows you to break down those events and zero in on areas that investors need to consider as these big picture events play out. And in doing so, you kind of provide an extremely useful perspective for those that know you can't just take what you read or hear in the mainstream news, or whether that be news channels or government PR pieces on either side of the political spectrum. So I thought we could take some time to chat about the latest issue, because to me, it epitomizes the broader trend that's kind of taking over the world right now. And you kind of explain it in you're great at coining these terms. And a big one that you're talking about is narrative economics. So before I introduce the idea in your latest monthly, can you just kind of explain that concept for people? Because I think understanding that is important, as it's probably, this month's issue is probably a huge example of what narrative economics is.
Sure. Before we jump into the subject of the latest issue, as you say, Woody, narrative economics, and I have to give credit to Robert Shiller, the Yale economics professor, Nobel Prize winner. He had a book last year called Narrative Economics. And I highly recommend it. I'm usually touting my own books. I'm kind of shameless about that, but here's another book, Narrative Economics by Robert Shiller. I really recommend it. But long before the book came out, I worked in that vein, and I often called it, it's often called anecdotal evidence. And mainstream economists don't like anecdotal evidence because it doesn't fit neatly into their quantitative closed form equations. So anecdotal economics is, you talk to a local restaurant owner, a local pub owner, who says, business is awful, and we've been shut down. Or maybe the opposite. Maybe they say, hey, it's great, the reopening's going well. We're getting in as many people as we can. A little hard to find help. That's just you talking to a bartender, let's say, but it's very powerful information, because why would that bartender's a restaurant owner's experience be very different from everyone else? It probably isn't. It probably is typical. I did this in the end of June in 2016. I was in London, and it was the week before the Brexit vote, and I wasn't. I read the FT and the Economist and all that for what it's worth, but I was talking to bartenders, check-in clerks, waitresses, taxi drivers, and I couldn't find anyone in London who was voting to remain. And I said, wait a second, London is ground zero for remain. I understand the uplands and other parts of the country might want to vote for Brexit, but I'm in remain country here, and I can't find anyone who's voting remain. Well, that was very powerful. It wasn't a scientific poll. I didn't claim it was, but that's a good example of anecdotal evidence. So I've done that for a long time, and that does fit into a statistical method called Bayes rule, and we don't have to spend a lot of time on that. It's just a way of forming estimates based on that kind of input. But Shiller takes it further. He says, well, it's not just a few bartenders or waitresses, as the case may be. You can have a narrative that affects the entire country, where people just buy into an idea, and if enough people buy into an idea, it sort of becomes true. It doesn't matter if it's soundly based. It may or may not be. He's kind of without prejudice to that. But if enough people believe something and act accordingly, it's true. And so that's a powerful idea. And he actually has a mathematical basis for it, which I use in other contexts, which is the model of epidemiology. What does a virus or the spread of a disease have to do with the spread of an economic narrative? And the answer is the equations are the same. The methodology is the same. Yes, one's biological and one's economic. But the exponential functions and the way that what are called the recursive functions, where something happens and it makes the original thing even more powerful, and that goes around again and makes it more powerful. That those kinds of, but also the way things die out. So narratives get old, they get boring, they get stale, or a new narrative comes along. Well, that's just like a virus. All pandemics end eventually. If they didn't, everybody on the world would be dead. They do end. They can be painful and tragic along the way, but they do end. So there are many, not just parallels, but many identical functions between epidemiology and the mathematics of how viruses spread to the mathematics of how economic narratives spread. And that's what Shiller did. He imported the epidemiology model into economics. We've done the same thing in strategic intelligence in years past, but it's very powerful stuff. So that's, but Shiller made one point, which is really, really important. The math is not that difficult. The readers will get it, and they probably can think of a few narratives on their own. But the point he made is the narrative doesn't have to be true to be powerful. It can be a narrative that sort of doesn't make sense, that actually doesn't stand up to empirical evidence. But again, if people think it's true, it becomes true in the economic sense. And one example he gave was during the Great Depression. What did you need to do during the Great Depression? Well, in the early years, I mean, the Fed, our Federal Reserve and other central banks really messed it up. They're very much to blame. But people said, unemployment is 25%, productivity or GDP is dropping like a rock. It's hard times. Even if you had your job or your business was okay, you saw so much kind of suffering around you. You said, I'm not going to spend any money. It's ostentatious. I don't want to be out buying a fancy new car or throwing a big party when all my friends and neighbors are out of work and, it's hard times. So I'm not going to spend any money. And that caught on. It's like, even if you had the money and you had a job, it was just not right to be out spending it. But from an economic point of view, that's the worst thing you can do. That's actually the time when you need people to spend money. You want them to spend money. You get into this liquidity trap where everybody's saving all the money. So the narrative was, don't spend it because it's ostentatious and it's not fair. But it's really bad economics because they say you want to spend money. Well, sometime around 1933, 4 years in, when President Roosevelt was elected, and his campaign theme was "Happy Days Are Here Again." That was his campaign song. All of a sudden, the narrative flipped. It's like, hey, yeah, let's go spend some money. Now, we were still in a depression. Unemployment was still high. Conditions weren't that different, but the narrative flipped, and it was like, you know what, I'll be a good American. I'll go spend some money. People around the world, because Australia and South America and Europe are all affected by the Great Depression. So then, from 1933 to 1937, the narrative was, it's good to spend money, buy a new refrigerator, buy a new car. You're helping create jobs. You're helping the economy. Now, the point being, neither one of those things comes out of an economic textbook. Neither one of them had a lot to do with public policy. It was just how people felt. And you say, well, how does this? Remember, this is long before social media and Twitter and Facebook and all this other stuff. We didn't need Facebook. You could just talk to your neighbor at a barbecue, and that's how it spread. And again, the math is exponential. So that's a really good example of how personal narratives are powerful. They don't have to be technically correct to be powerful, and they die out and flip and change and morph. So what a good economist would do, what a good analyst would do, or in our case, making recommendations to readers, is to first of all understand everything I just said, which is not that you don't need a PhD. A lot of it's just common sense. First of all, understand it. But secondly, look out for the narratives. Understand that all your I believe in fundamental analysis, technical analysis, supply and demand. They all have a place. You got to use all the tools in the toolkit. We use a lot of tools that other people don't use, such as Bayes' rule, which I described earlier. But in addition to that, look out for the narrative, because you can get everything right. This company is weak earnings, it's over leveraged, it's in a bad sector, et cetera. But you can get steamrolled by a narrative that says, no, right now we're in the reopening narrative. I could show you, fundamental financial analysis on cruise ship lines showing how they're over leveraged, and people don't want to use a COVID passport, and people don't. One cruise line said, You don't have to be vaccinated. That's actually illegal in Florida, by the way. You're not allowed to ask in Florida, but
Right.
so you're not allowed to require it. But we're going to ask you voluntarily to tell us if you have a vaccination. If you don't answer the question, we're going to assume you didn't, and we're going to put you in a separate section of the ship. Well, it's like being a leper, right? Who wants to spend your hard-earned money on a cruise where, if you happen not to have been vaccinated, you're going to be put to one side and not allowed to go to, the casino or the front row or the show, as the case may be. So I can give you a lot of negatives, but it sort of doesn't matter because the narrative is reopening. The airlines, cruise ships, movie theaters, they're all good because we're all reopening. Now, so you get this gap between the perception and the reality. Reality always wins, but it can take time. This narrative, this perception can prevail for a long period of time before the reality catches up, or before the gap closes. So you have to, as an investor, as an asset allocator, again, do all your homework. Hopefully read our newsletters. We do all that analysis for you. But watch out for the narrative. They can steamroll you, or they can boost you. If you get the narrative right, you could pick some stocks that you might not otherwise pick.
So that was my initial conversation with my good friend and colleague, Jim Rickards. Now, we've got a unique position here in Australia with Jim. I mean, most of the time when he does the rounds in the media circuits, he's talking about one of his many awesome books, bestsellers since 2013. But we have a pretty unique perspective with Jim. Like, we publish a monthly newsletter where he really delves into the ideas. The books tend to talk about his ideas on a long-term basis, whereas each month we talk about the topics that we feel important for Australians on the ground, taking into account the bigger picture, geopolitics, and the things that are really being missed by mainstream media. And those are the things we couple it with also investment solutions with our Australian-based investment director. Now, the conversation you've just heard covered some of the ideas in his latest monthly issue. If you'd like to check out Strategic Intelligence Australia, click one of the links below and you can start a trial. It's a 12-month subscription, but the first 30 days is covered by a money-back guarantee. Check it out, see what you think, and hopefully we'll see you on the inside. Look out for part 2 of this conversation.